over the last year or so, the apparel stocks have made a monster comeback, and I bet they've got more room to run. Consider the case of PVH. That's the parent of Calvin Klein and Tommy Hilfiger, among many other smaller brands. This stock gave us a 50% gain in 2017 and has tacked on another 15% year to date. Why? Because the company's doing very, very well. PVH just reported its latest quarter after the close today, and once again, the numbers were excellent. The company posted an 11-cent earnings beat off a $2.25 basis, higher than expected revenues of 16% year-over-year, fueled by strength at both Calvin and Tommy. On top of that, management gave robust guidance for both the next quarter and the full year. So can this stock continue to climb? Let's take a closer look with one of our faves. It's Manny Chirico, the chairman and CEO of PVH, who also happens to be a longtime friend of the show. Get a better sense of the quarter and the company's prospects. Mr. Chirico, welcome back to Mad Money. Good to see you, Manny.
How are you?
All right, have a seat.
Thank you.
All right, Manny, you started it all. I was going back in my notes, and you were the first person to say that something's changed, and it may be seismic, that things are much better. It continues?
It continues. Fundamentally, the business couldn't be, I think it's the strongest I've seen it in my 25 years with PVH. And
strongest in your whole time?
My whole time. Our business between Calvin, Tommy, and our heritage businesses, you know, we just had a quarter that was completely off the charts from beating our expectations. We continue to make the investments in the business, and they seem to be delivering.
Now, when you say that 25 years, do you mean 25 around the world? Because it does seem that every market's good.
Yeah, right now we're seeing strong business throughout Europe, Asia, and North America. The only area where we see some softness is in South America, particularly in Brazil, what's going on there. Relatively small business for us, but an important piece. But besides that, you know, I think when I was on the show at the end of our third quarter, early November, I said to you, I really see business starting to inflect and change. Clearly, we came through a really strong fourth quarter, and that momentum has just continued as we've gone into the first quarter and into May.
All right, so explain to me how it works, Manny. It looks like that inventories consistently seem to be lean. They keep ordering more and more from you. It keeps blowing out of the stores. This is quite different from the many years you've been coming on the show. What changed psychologically?
So, look, I think well, a couple of things. I think last year, I think, in general, retailers really started to plan the business even tighter.
Okay.
And then as we got into the third quarter, business started to really come on strong. Fourth quarter, that continued. And you really saw strong sell-throughs and lean inventories coming out of the holiday season. That really positioned the entire industry well as we went into the first quarter. Had a strong spring, very strong February, March, came through all of that, and now going into May, May has gotten off to a really nice start as well.
It has.
And you're selling fresh inventories, less need for promotional clearance markdowns to the level that you've seen in the past, and I think that's why you're seeing strong performance from an operating margin point of view as well. So our gross margins were very strong, up a couple hundred basis points.
So early read, I know this is the gross margin amazing. Early read department stores for May, probably pretty good, huh?
Yeah, look, I see our business. I don't see everybody's, but based on the trends I'm seeing with our business in our major customers, and that's all the customers that you know in North America, business continues to be very strong.
But you called out online right at the top.
Yeah, well, look, you can't talk about the apparel business and not talk about online. Our own online business, our department store customers' online business, and a number of the pure plays across the board, that's our fastest growing channel. It represents about 10-11% of our volume, but it's growing significantly faster than the rest.
Okay, now there's verbiage in your quarter about China. Just tell it to me straight. I mean, China's getting bigger as part of your business, and it's good, right?
Yeah, China is very good. The surrounding areas throughout Asia, Hong Kong, Macau, that's very good. I think we're well positioned as a premium brand in those markets. That's really a part of the business that's growing very strongly in that market, and both Calvin and Tommy are outperforming.
Okay, well, I mentioned China because obviously we're all concerned about tariffs. We want a great, strong country here, but at the same time, we don't want the doors closed. We okay for PVH in China?
Sure. I mean, you don't know what's going to happen day to day, negotiating between our administration and China. It feels like cooler heads will prevail.
Right.
The threats of back and forth as far as tariffs, I think those are negotiating positions that will work their way through. There's clearly changes that China needs to make to open up their markets. I think there's real issues around technology and stealing technology that need to be addressed. But at the same point, I don't think you want to really disrupt everyone's supply chains coming out of Asia as we go forward. So I think as we work through this, hopefully things will work their way out. I feel much better today than I did 2 or 3 months ago.
All right, that's important. Now, there is kind of a wackiness to the dollar this quarter, right? And what it will mean for next quarter.
Sure. Look, when I was on here last, I mean, our business fundamentally has never been strong.
Right, and that's
one piece of the business that is of our results that have, as we look out now has changed is the strengthening of the dollar against particularly euro, but against all currencies, and that's had an impact on our ability to take the guidance up as much as we've wanted to. We've been conservative on planning foreign currencies. And we've been very conservative on the second half of the year. We're not building in the trends we're seeing in the business now in the second half. As business develops, we'll adjust that. But I've tried to be as transparent to the market as possible to say is, I just don't want to get ahead of ourselves. Given the volatility, particularly with currencies, we don't want to get too far ahead of ourselves projecting out the strong trends we've seen in the last couple of quarters. We're not planning those trends for the second half of the year. If that were to happen, and it feels like it may, we'd clearly outperform the numbers that we're projecting right now.
Well, just another, look, you called it first. You guys have been unbelievable. Just fantastic work. That's Manny Chirico, Chairman, CEO of PVH. What a stock. Great company. Mad Money's back after the break.
Thanks, Jim.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.